Eric Muathe for the weekend of June 28th and June 29th, 2014. Let's take a look at how markets ended on Friday. The biggest mover being the NASDAQ, which was up about 0.43%. And the other mover was the VIX, which was down 3%. Otherwise, most of the markets pretty much remained unchanged. And for the week, we see that the S&P 500 was unchanged. Take a look at how the Dow did for the week. The Dow was down about 0.56%, slightly down. Take a look at the NASDAQ, and for the week the NASDAQ was up 0.68%. So now let's take a look at the annotated charts here. We begin by taking a look at the NASDAQ weekly, and you can see we continue holding above the previous weekly closing highs of 4,336.22. As long as the market is holding above that level, that is a breakout market. And so we see that the NASDAQ is joining other markets in the world in trading around huge round numbers, currently trading at 4,400. So we'll remain to see what that means, because you see the Dow is trading close to 17,000, the German DAX is trading close to 10,000 and things like that. So you see lots of round numbers. The Russell 2000 is trading close to 1,200. So lots of round numbers all over the place. Maybe there's something significant about that. If you take a look at the previous breakpoint on the RSI here for the NASDAQ, which led to this pullback here, so that is not insignificant. If you draw a straight line there, you can see that still this area we've been talking about continues to be an area the market has to contend with, either for a breakout or for resistance. Right now it looks like it's setting up for resistance. It will not surprise me short term, or we find the going very difficult for the NASDAQ to move and trade significantly above that 4,400 level. If you take a look at the NASDAQ from a daily chart, we see that we closed at fresh 52-week highs. The RSI is holding above 69.10. As long as the RSI is holding above 69.10, you'd expect the market to continue moving high. Now you see the breakout on a daily basis took place here when the RSI jumped to new highs, or jumped above the trend line here, which was beginning of June, which was that nice entry point, and which also was market moving above this bullish wedge here. So once it broke out above this wedge, man, it just makes sense that the market is trading higher. Also, don't forget that as far as the MACDs are concerned, and I have 3 MACD settings here, but we'll take a look at the main MACD, because the NASDAQ's MACD is above 0 on the daily. That just means that momentum continues being to the upside and the bulls are still in control, and pullbacks can take place, but the market continues being healthy. A quick look at the NASDAQ 60-minute chart, and we can see that while we were thinking the market was going to trend higher even after Thursday's lower open, just because the market was finding support very simply on the RSI on the hourly. And so once we hit this recent level here, we knew that that was going to be a bounce area, which was here, and also goes back to this bounce territory here. And also when you go back to this line here, very successful entry point if you're a short-term trader. So the market was predictable in that sense. And also if you take a look at what we discussed midweek, was that if the market holds this 0 level and bounces, the market should trend higher. And we also moved back above 0 on the other MACD setting, suggesting that the market short-term was going to bounce, which is exactly what we saw in Friday's session. Now if we take a look at the Dow weekly, and you can see the Dow weekly trading at this round number at the highs here was at 17,000. Now we see that we might be looking at some type of resistance, because we've made higher high in price on the weekly, but the technicals have made lower lows, going back to the RSI weekly highs of mid to let's call it mid 2013, end of 2014, and you can see that now this seems like a double top on that line. So if the market is continuing to respect that area, don't be surprised to see a significant pullback. Also, there was a line that has been on my charts for a while. It is this line here, this blue line, and it told us when the market made highs previously, which was here, which was that high, it became resistance here, which was that high. And every time we move below this line like we did here, resistance, move back below that line here, which was a short-term high, move back below that line here, short-term high, and you can see now we are forming double top, telling us that this is a short-term high as far as the market is concerned. Let's take a look at the daily for the Dow. And the daily for the Dow, you see that already pullback has taken place, and now we are contending with short-term support on these lows. Just take the recent daily lows on the RSI, draw a straight line. You can see the market is holding that level. As long as that is holding, maybe the market trends higher. If that line breaks, then we have to be open to the possibility of the market pulling back much more significantly. Also, don't forget the new week is going to begin a new month on Tuesday, and the market might change its sentiment, its direction over the next month, just because the technicals could also change. So be aware that the new month could actually introduce new energies into the market, and that's something we have to watch the monthlies for. The Dow 60-minute chart, and this one is very good at telling us when the market has been finding lows recently. You can see here, this line here that I'm now drawing in blue has been support ever since these lows. Every time we bounce on this line, we have short-term direction to the upside, short-term direction to the upside. Recently here, mid-June was those highs, easy to spot. And then again, as of yesterday's, when the Dow was down 120 points, it hit that level and immediately snapped back, and that's why the market has since been trending higher. It makes a lot of sense that the hourly is held together. You can see that the MACD, at least one of them, is now back above zero. If it stays above zero and the other MACD also moves above zero, expect the early part of next week to be to the upside. Now, the one thing we have to watch is the Dow monthly in the month of July. You need to watch that RSI because it's very close to 69.10. If it breaks below 69.10 like that, which is also would be a break of this trend line on the monthly, that would be a serious break. So we need to watch that. Below 69.10, we have to be very careful because the last time we cracked back below 69.10 was here, late 2007, and previously we had cracked below that beginning of 2000. And since we know what happened after 2000 highs and also after 2007 highs, the market had serious pullbacks, if not serious bear market. So we have to watch this trend line because if it breaks, you have to start thinking the market could be setting up for very serious pullback. S&P 500 weekly, and you can see here that we've been talking about this channel here and the fact that the market is trading at the top side of that channel. So that could be resistance. You can see over the last 5 weeks it's been banging heads there, hasn't closed above that, and also this channel. So this channel continues being tested on the top side. More likely than not, this is going to lead to a pullback. Now, the degree of a pullback is hard to tell, but more than likely that has been the case. In fact, you can even see similar type action here before the market would actually show a slight pullback here since we hit that level in March. So if that continues being the same type of action, we should expect the market to pull back. Now, if we take a look at the daily for the S&P 500, we see that the MACDs is what I want to show you. The MACDs continue being above zero, and that's a big deal. As long as the MACDs are above zero on the daily, and if you take a look at the main MACD, as long as it's above zero, momentum continues being to the upside. In fact, if you go back and take a look at the MACDs in 2008, 2009, you'll see that the market was trading with its MACDs at or below zero. Especially on the dailies and the weeklies, the MACDs were below zero. That's why we're in a bear market. As long as the MACDs are above zero, the market tends to be more positive. Now, if you take a look at the S&P 500 monthly, actually, let's take a look at the hourly for the SPX. And just like the Dow and the NASDAQ, we found support on this line here. simple support over the last day or day and a half, 2 days. Once we hit that level, we knew the market was going to bounce. So the trading off the lows of Friday's down action in the open there was very predictable. Once we hit that level and started moving high on the RSI, you knew that price was gonna follow. So that was very easy. We called it on the bounce, just based on the fact that the RSI was also finding support on this RSI lows line. So this lows line held right there, and once it bounced off that level, then we knew that the market was more than likely gonna see higher prices on an hour-to-hour basis. Now let's take a look at the VIX. And the VIX always tells us what markets are doing short term in terms of where they want to go. And you can take a look at the VIX, and there's some type of resistance on the top side here. And so we talked about this during the weekend video, that this was going to turn into resistance in the daily, and it became resistance confirmed by the RSI resistance here. So once we hit that level there, you knew the market was going to pull back to the upside. The VIX was going to pull down. And that makes a lot of sense, especially if we take a look at the VIX hourly chart. When the market was trying to sell off, all the VIX did was come back to this line here, which has been resistance. And most recently, it hit that level there, short-term high. It had hit that level there, short-term high. It had hit that level there, short-term high, and on and on and on. So once it hit that level, we knew the market was going to be okay. Also, you can draw another line, which is the top of the RSI on the hourly. Once that level was hit, remember on the RSI here, we are looking at a period of 26 instead of the default of 14. So a 26 period. Once we hit that line there and stalled, then the market was telling us that more than likely the market was going to be trending higher. And you can also see that the MACDs on the VIX are now getting close to both being back below zero. So very close to that zero line. If they both drift below zero, maybe the VIX is going to pull back even more. But we have to be careful, because if this situation changes to where they both are trading above zero here, then the market could actually sell off. So we need to watch that. The main thing to watch is that daily chart, because the daily, very simple. The only way the VIX can move higher is if it can move above this declining price channel trend line. If it can move above that, maybe the VIX has a spike, the market has a serious pullback. You can see there was a move above this declining trend line here. Once the VIX spiked, the market had a slightly okay pullback, so we have to watch for that. But since we are not trading above that trend line, the market continues being safe to the upside. Let's take a look at Apple here, and we're going to take a look at Apple from hourly chart. Just want to show you here. So this is the one thing you can also note here is, seems to me like there's some type of a huge cup and a couple weeks of a base there, or a handle, and maybe the market wants to push this instrument higher. So we need to watch this. So 92.5 was around that area of 92.5 was the recent weekly closing high. So if Apple can breach that level to the upside above 92.5, it could actually be setting up for a move higher. What I wanted to show you was the hourly, because the hourly was giving us some type of a entry point. That's why we started thinking this was where to go long, around $90 midweek, because if you draw the line there was a nice entry point here on hindsight, which is this level here, about 72. Of course, post split, draw a straight line. Once we bounced off this level here, we suspected the market could creep to the upside, or at least the stock could creep to the upside. So watch that 92.5 level. It could be breaking out above that. Now the key we've been talking about here is to watch Apple on the monthly. If it holds above 91.48, then that would be breaking out on the monthly. So 91.48 is also a trigger to the upside. If it holds above that, that's good. If it breaks below that, that's not good.